Things are looking pretty good today. Let's talk about next week. We got three big names, giants, AMD, Apple, and Amazon. Rick Duquette, Jenny Horn, looking at the charts and the commentary going into them. Let's do Amazon first. It's up this morning. Microsoft, Alphabet, obviously share a lot of business themes with Amazon, so it's doing well.
Yes, it is doing well, but I have to say we're in now a precarious situation because if obviously they report similar sentiment to what we heard from Microsoft and Alphabet, great. That means that it's like the rising tide lifts all boats. But if we hear something drastically different from them, I feel like the stock could get absolutely just decimated because now we go in with a relatively high bar. I mean, if we had gone in yesterday,
kind of a disadvantage to go last.
It really is kind of a disadvantage. But hey, they're not last, but Apple is technically last. They're just, I guess, last of these cloud players. But Street is still expecting, like some really stellar growth. AWS did rise around 13% year over year last quarter. That accelerated from the 12% growth rate they saw in its past 2 quarters. So while we are expecting this modest acceleration gain again, Street is saying that cannot continue to progress at that pace for that much longer, just given how massive it is. That's one way to look at it. But overall, given some of the inclusions we've seen also in all things ads, I mean, advertising is a major part of this company's business. That's also expected to be a tailwind as they continue to command. I mean, advertising rose 26% year over year in their previous quarter and 27% year over year in their fourth quarter. So the Street is thinking acceleration around mid 20% range would be, I think, what the Street is expecting. But retail remains the largest category for the company. And this is where I feel like Amazon becomes. It's
not where they make their money.
It's not. They're improving that, though. So from a profitability standpoint, that is something that's been the biggest positive development over the last several years. Operating profits have been guided ahead of expectations. So if they can deliver upside, that'd be huge. But I think their retail business is what makes them completely different than the Mag 7. I mean, I know that Apple has its way in like the retail market, but Amazon is now truly has taken the concept of a mall and just brought it online. Like all these companies that you used to fill Victoria's Secret, Gap, they're all now like on a storefront on Amazon. It's crazy.
It makes it easy to get it delivered fast. You
sure
said
does.
Growth mid-20s?
Yes.
You're expecting? All right, so a little bit less than the cloud growth at Microsoft and Alphabet. All right, Rick, a little bit of a pullback here in the last week. Where are we at?
The chart looks a lot like many other charts we've talked about recently in that we had a lengthy rise upward that took us into yearly highs or all-time highs or whatever for, some of these names, and then a pullback. So this has not been a terrible move by any means here. We're still up 75% from the yearly lows, and we retreated back to a supportive area. We bottomed out twice around 165.75, didn't quite touch that area but came close, and then we bounced today. We after finding some resistance yesterday at our 63-day exponential moving average in orange there. Now we've cleared that moving average handily. We're still below our yellow 21-day, which is trending down. That's not the greatest sign for the overall trend here, but this recovery looks good here, and it's taking us close to the top of our downward sloping channel between these two white dashed lines. If we look at RSI, we can see also that we had an uptrend that was broken during our decline. We had a downward trend in red there. That's also been broken today now. So we're getting a push above a resistance level and a break beyond a downward trend in the RSI. That's not a bad recipe for success for the bulls here. So if we were to keep moving upward, we've got a little bit of a confluence right here. We've got our trend line and our moving average and this old ceiling that we established here, a repeated high point near about 180. So 179 to 180, that would be a good point for the bulls to break through. To the downside, 63-day EMA is supportive here, near about 174 or so. And then these lows that we talked about just recently, near about 166, 165.
Some pretty nearby support for Amazon in this range it's been in since earnings. I mean, that's an earnings-derived support line, basically. So better hope that one holds for Amazon, for sure. All right. How about advanced micro devices? Also known as AMD.
Also known as AMD, and I was just checking to see how far we've fallen in Intel today, as we were initially higher amid like the all things AI hype, and then now we're down 11%. So that, I mean, these companies to me are incomparable.
Of course, AMD's up while Intel's down.
Right. I mean, they never trade alike anymore, and that's been the case for the better part of the last like half a decade at this point. So I know there's the story of like how they correlate the David and Goliath. I frankly haven't ever seen it, honestly, in my trading career. But but I can understand like the historical reference to it. But still, nonetheless.
Yeah, they're like inverted. What's good for AMD has been bad for Intel, basically.
And I've never even seen these companies like comparable in the sense of like their price. I know that we see some degree of outperformance, but not from Intel. AMD has been a banner of a name. Not this year quite as much, but we're still up over 80% on a 12-month basis. They've been launching a lot of new products. Actually, we did hear back in mid-April, they introduced their new product line, the AMD Ryzen Pro 8040 series and the 8000 series. So there's two very main differences between these two products and its marketed segments. For example, like the 8040 series is a processor designed for this high performance, whereas the overall 8000 series aims to support daily business activities like desktop processing.
Right,
so they're in like...
That's where they're eating Intel's lunch.
Totally. And that is where I think like we talk about names like Dell that have been crushing it and some of these various like actual hardware makers or software makers. And it just seems like that is where AMD is really standing to benefit because it's going to be very difficult to compete now against NVIDIA.
Yeah.
Because I know that they're, again, different business models, but that's who I see mostly.
Well, yeah, not different enough.
Not different enough. Yeah. So while they have been able, I think, to capitalize and continue to gain against Intel, now your next hurdle, David and Goliath, is now like Goliath versus like everyone, and that's NVIDIA.
Versus Kong. Wait, isn't that a new movie?
Yeah.
Goliath versus Kong. What am I? All right. No, I like that point because it's just it's a tough, comparison to live with when, you have to compete with NVIDIA. It was kind of slower to pick up, but ultimately it did earlier this year, Rick. But I mean, the turnaround has been pretty rough.
It's been a lengthy decline in this name here, and we had a nice move to the upside here, these explosive highs that we reached above 227 or so, but then we gave back much of the gains here. We can see that we formed this rather steep falling wedge type shape, which I would remind you is typically regarded as being more bullish here. And we did indeed get an upside breakout here beyond the upper boundary of this trend line here. Moving average is still mostly negative here. Our purple 250 2-day is below price. It's still trending upward very slightly, but our two shorter term EMAs, yellow 21-day, orange 63-day, they're both trending down, and the faster one crossed below the slower one. So that's a sign that the trend is more strengthened to the downside here. We can see as well on RSI that we had a matching break to the upside. We had our price trend line breakout and our RSI trend line breakout as well after a brief dip into that oversold area here. So once again, it's rather more of an encouraging setup here for the bulls here because we're getting a break beyond these two matching levels here. If we were to keep moving upward, right here is the obvious point. We've got a low points here, which is our red line. We've got our 21 EMA and our 63-day EMA. So between like 162 to 167 or so, let's call it maybe 164, 165 around that point. That would be where the bulls would want to clear for a new uptrend here to the downside. Our green line here represents the low point that we reached during our decline near about 145.29. If we were to continue to falter beyond that, the purple 252, and then these old lows right here, our light green line near 134.
All right, nice. Good look here at the immediate kind of bounce back we've gotten from the oversold territory. Keeps AMD hope alive that maybe this actual support that formed at 145 will hold. But it seems like it could be a volatile report because, I mean, if it does turn around, then you've got this kind of massive winner turned reversal, which leads itself to big moves. And then if it does actually turn this bounce into something real, then you're back into kind of the FOMO trade almost. So I think among the three, AMD looks like it's got the most potential for volatility. Last is Apple, which certainly has, I think, the lowest bar, perhaps, at this point, Jenny?
I mean, absolutely. Just based on its performance, we've been below its 200-day moving average for the last 2 months. And it's been over 2 months now. Not to steal Rick's thunder, but that's obviously not good. Maybe due for a breakout, I guess, that we could argue. But I will have Rick talk more on that. No, going into their overall earnings next Thursday, of course, after the close, I think what really is the story is we know so many of the headwinds. We know what is the weakness being priced in. It's what they can say going forward. It's all about guidance. guidance. I mean, we're expecting earnings to decline, revenue to slightly sort of increase, but it's, to me, those numbers don't even matter. How can you guide going forward? How can you re-excite investors? Because to me, it's not the story of now how Apple impacts the market. It's now how like everyone else is impacting Apple. They've got to sort things out in China. They've got to talk about India because they're expanding in that country, and that's a massive addressable market. They've got to figure out ways to get these bulls excited again.
If they can swap China growth for India, market would love to hear that because Huawei has been pushing them around with cheaper phones. Rick, it's near the lows, so, I mean, maybe that helps.
Almost unchanged over the past 52 weeks. We're only up about 1% from that point. So kind of a dud of a chart, really. You know, we've had some volatility over the years, but we kind of established this range after we broke through our downward sloping trend line here. We did have a downside push, though. We stabilized near the October lows. We tested below them for a little bit, but we did manage to find some footing. Now we're finding ourselves breaking up above the yellow 21-day EMA after unsuccessfully testing it yesterday here. We can see we had a long period of RSI declining here, but it's looking like perhaps we're pushing above that trend line now, and we're breaking above the 50 midline concurrently with our break above the 21 EMA. So once again, a rather more encouraging setup here. If we were to keep moving upward, plenty of resistance to contend with here. Volume profile, point of control, our two longer-term moving averages, but the real point would be right here, these old highs from March near 178.67. That would be where we'd really want to clear to break out of that range that we established. To the downside, this is the key area right here, 165.67 in the short term at least. That would be a dangerous place to start going below those recent lows.
Yeah, all right. Apple got its work cut out for it on the chart for sure. A lot of overhead pressure and resistance potentially for the stock. Good context. Thank you very much, Rick Ducat, Jenny Horn.